Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be only talking about where your money is and are the banks safe and the latest on Amazon stock. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at anchorstarwealth.com. Good morning, Steve. For clients of Ankerstar Wealth, who actually has their money?
Hey, good morning, Allison. Good morning, everybody. And we're on the road, as you can see. So forgive our technical difficulties as we may or may not have them this morning. But trying to get this done here in the hotel lobby in Spokane, Washington, where it's 28 degrees. So I'm bundled up, and across the way, there's a little fireplace trying to keep me warm here. And it's Pacific time zone. So, of course, it's like 6 in the morning. So we have all of that going for us this morning. But the question at hand is, where is the money you have with Ankerstar Wealth? That's a great question. So some are maybe are like, well, duh, it's obvious, but let's just go over just in case. So, make sure we're all on the same page, because obviously we're into a couple weeks into some bank trauma. So just making sure. So whether you're with if you're with TD Ameritrade, then you're with TD Ameritrade, TD Bank, which is perfectly safe, but also Schwab bought them. So Schwab's really the parent company. They just haven't done the transition. So your money's really with Schwab Bank, if you will. And the CEO, Walt Bettinger of Charles Schwab, got on CNBC last week and did a great interview of kind of putting everybody to rest. So if you just go to schwab.com, this is a special page, but you can click, you'll be able to find his interview pretty quick if you want to hear it, from the CEO's mouth about how strong the balance sheet is. So you can see this is from a few days ago. Goes out to everybody, whether it's a client, employee, or owner, and just basically a lot of reassuring words that your money is safe. Stock price, don't judge a stock price versus bank deposits. Those are apples and oranges. Two different things out there, right? The stock can be going down. That's an open market. When all the banks get hit, all of them are in different ETFs and things, and those sell off because there's some bad banks out there. Well, other stocks can be affected, right? There can be some contagion, if you will. That's just the stock price. That doesn't have anything to do with the balance sheet. Unrealized losses, that's that mark to market we talked about last week. Held to maturity portfolio that can be misleading. You might have a CD out there that you paid $100,000 for, that now it's showing that it's 94,000 or something like that. So that's today's price if you had to sell it. Obviously, Schwab's holding these things to maturity. Client may move their deposits, but they're not leaving the firm. So there's a lot of move to safety here, but they're not taking their money away from Schwab. Relatively little risk. Again, Schwab, the reason I use them is because they're so strong and so capable at what they do. So therefore, they don't take a lot of risk in their portfolio. We're the same way. Best of breed investing, if you will. Nothing's changed over the years with Schwab. They do, very straightforward business. They don't try to time the Fed or really do a whole lot in prediction base. They just are more reactive with, they'll take whatever the Fed's doing and then use that the best they can. And then, of course, the unrealized losses from different business models can be misleading. And their point is Silicon Valley Bank and some of the others were taking a lot of risk. That's just not the case with Schwab. So overall, your money's with Charles Schwab, and you don't have any concerns.
Well, with everything going on in the bank stocks, are the banks safe?
Well, so I just told you the Charles Schwab is safe, but are the other banks safe? And that's a good question, right? I think you do need to look in the mirror and say, where's your money as far as where you're banking nowadays? If you've been with your same local bank forever and you want to go talk to them, I'm not sure. I would have to imagine that the local banks are going on a fairly aggressive marketing campaign to reassure you that your money is safe. But if you have any doubts, go and talk to them. Ask to talk to the manager and say, hey, tell me about your balance sheet, and tell me, is my money safe here? And they'll give you the straight scoop, right? So overall, all in all, there was some concerns this weekend, or actually I would say rumors, more so than concerns, that some European banks were going to continue to struggle. That did not happen. Come Monday morning, we had the Federal Reserve meeting Wednesday. We had 2 up days in the market, Thursday and Friday. Today's shaping up as an up day. Overall, some banks that are in the news, First Republic's up 40%. There's a lot of money going back into the banks, and a lot of people are buying into the banks now because they're, you buy low, you sell high, right? So I even picked up some the regional banks KRE fund. If you've seen that, if you have an aggressive portfolio, you have some Schwab SCHW as well as some KRE now in your portfolio. So overall, I think the the banks are safe and getting safer. I think this is, the issues we had were at the high risk end of the spectrum. That's being rewickered. But overall, where you and I bank and most of us operate, that is a safe foundation, in my opinion.
What's the latest with Amazon stock?
Well, the Amazon stock is one of the best stocks out there. That's an opinion, right? It's certainly one of the largest companies in the world. Morgan Stanley put this piece out this morning saying it has 50% upside. Excuse me. That's a guess, right? And I'm sure it does. It just when, right, is over the course of 10 years or like next week, right? So so kind of a safe article on their part, but they do take great pains to go through the Amazon's business, and this article's on CNBC, and talk about the different ways they have to win. And Amazon's been in the news for cutting jobs, 27 total. You can see it in the blue there in the hyperlinks, 27,000 total this year. But don't forget, since COVID, they put on like 800,000 jobs, right? They have like 1.5 million jobs out there. So, obviously it's a big deal if that is your job being cut. But if it's not your job being cut, it's really pretty minor in compared to the size of the workforce and in the size of the economy, right? It's not going to have a economy-wide impact. So overall, Amazon Web Services, a lot of folks like to say, if you buy the stock, you're basically buying Amazon Web Services for the profitability, and everything else you get for free. If Amazon continues to grow, which I think it will, you'll eventually see this company, they'll have to break it up, right? Department of Justice will come in, break it up into pieces. And of course, as a shareholder, you're going to get, 4 or 5 stocks out of this, one of which is AWS, and then some others you can, choose to keep or sell, or, whatever you want to, when that time comes. And of course, I will advise you through that. But overall, love where Amazon is. It has not gotten a lot of love this year, so you can still pick it up at this price. And I do agree, it has a lot of upside. 50%, I don't know, it's probably not going to hit 50% this year, but you never know. Again, it's one of the best companies in the world, very well run, and they're doing all the right things.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vapservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.